Good morning, traders. It is Wednesday, October the 23rd. Last night, the Brexit deal vote passed, and it was won, but more or less, it's still going to have to go through its kind of rigmarole. It's not going to happen on October 31st. That was turned down, but looks like it's going to happen. It's just going to be delayed. So overall, looks like things for the currencies are going to start to shake things up a little bit more, and we're seeing a little bit of currency movements this morning, but nothing significant. I think most of the info and movement was baked into the cake, expecting it to happen. And now that we have the news, we'll probably see the currencies all reverse a bit and give back some of the recent reversals that we've seen where the dollar sold off. We saw the pound rally, euro rally. Probably see those stall out and pull back for a little bit, and then we'll see how things go from there. Now, let's take a look over at the equities markets in general. If we look at the SP 500, continues to chop around up near this resistance. You can see yesterday it pushed up to some nominal new highs, or not new highs, but nominal multi-week highs here, and then sold back down. And today we're trading lower. It was actually quite a bit lower in pre-market, but it has rallied back to be down just a little bit. The Nasdaq, on the other hand, is trading slightly positive, but Nasdaq's had a lot more price reversals where we see a big sell-off and then a big rally, another big sell-off yesterday. Today it flushed down even lower and it's starting to rally back, but it's a pretty gnarly looking chart. This type of price action, this rotation here is very similar to what we start to see near market tops, where price gets into these big rotations that we've seen, and that it's the battle between the bulls and the bears. You get waves of buying and then waves of sellers stepping in, and it continuously happens. So overall, it's usually a sign of weakness, of a trend change coming, and we'll see how things unfold. Again, we've got this kind of upper resistance line, these highs over here. We have these highs that were more or less broken on the short-term basis, but the Nasdaq still has this previous high way back here. So there's still room for the Nasdaq to push higher over the next week or so, potentially even over the next 2 weeks before it could potentially stall out. Now, if we look at where some of the safe haven money is potentially starting to flow here with the main equity markets showing signs of volatility, let's go over to the utilities. Money has been starting to move into the utility sector. And if we just zoom in a little bit to this chart, you can see we've had a really nice ABC correction, meaning we have a nice A, B, C correction. Came down to the 50-day moving average. Now we're starting to see it move up, and it's back above the 5-day moving average. It's back above the 20-day moving average, and we'll see if it can get some traction. More or less, it's in a short-term downtrend still, but it's on the verge of flipping over here, and maybe we'll see it trade sideways here, a little type of consolidation before potentially taking a run higher as a safe haven play. We saw a similar kind of price action over here where the market corrects, and then it ended up putting in a little bit of consolidation before it started to continue for the move up here. And this could be the base, very similar to what it formed over here, and we could start to see utilities take off. Now, we traded utilities for the last rally, and I'm not sure if we're going to trade it this one or not. We'll take a look and see which one has the best setup at the time. Could be precious metals, could be bonds, could be utilities. We'll see where we want to go going forward. Looking over at, let's take a look over at gold. Gold up 0.5% this morning. Again, it's still in this series of bull flags. It rallies, flags out, rallies, flags out, and this could continue to do this for some time, or it could break out at any time. Obviously, no one knows what the market is going to do. It's just a matter of how well can we follow trends and stay out of the market when it is more or less trendless. Here it is, you could argue here it is in a counter trend. The main bias for gold is to the upside. We don't really want to short something that is in a new bull market. Rather, we want to catch these explosive pops in these moves, which we've played these moves, whether it was with GLD or UGLD or SIL, or we played different ones for each of these rallies. But overall, when the market starts to reverse and start to break to the upside, we'll be looking to get long for a move going up. But this could continue to unwind for a longer period of time. So we just got to let it do its thing. Now, if we take a quick look over at silver, silver, same thing, kind of flagging down here and holding its ground. It's stuck under the key moving averages, the 50, the 20-day. And if we look at gold miners, the GDXJ, similar type of price action. It's flagging down and we're letting it do its thing. It looks like it still wants to potentially come down, and we got a 200-day moving average down here. This is kind of a prime candidate for the market to try and gun it for that, to test the 200-day. Typically, when the market corrects and hits a long-term moving average, typically the first tag of it, you usually see some type of bounce. It's more of a momentum play, a day trade, or a 1 or 2 day bounce. If you tag a long moving average, investors pile in at that point, and you could see some type of bounce. Doesn't mean it's the start of something new, but it's usually a level where a bunch of buyers will pile into that sector or commodity or stock, whatever it is, and buy it. So if it does come down and tag that level, be prepared that when it hits it, we're probably going to see some buyers step in for some type of a bounce. Looking over at natural gas, up 0.8% this morning, trying to hold up in this pattern. Again, we've got this bottoming formation that we are very similar to what we saw back in July and August. We've got this same type of pattern unfolding over here. Obviously, we had some news with weather, and now it's starting to muscle its way back. Now, this drop here was based on a downgraded forecast. It's going to be warmer than expected, so obviously less natural gas needed to heat homes, and that really put the flush down in the market, really flushed it out. A lot of people panicking on that day. It was getting pretty close to our stop. We had a stop set down over here. But more or less, the market loves to do this. And whether the news is real, a lot of people were talking about how it's fake news. They're trying to shake everyone out of natural gas so it takes off with everyone kind of panicking out on a day like that. That happens more often than not. Who knows if the news is real or not, but we are still anticipating a rally back up into this area and then hopefully back up into some new highs. So hopefully this will hold its ground. We'll see it continue to work its way up, and eventually we'll see a big pop, and we're looking for some big extension rally like this going into November, December. Looking over at crude, down 1% this morning. It's still forming what looks to be a bear flag. Overall, again, nothing has really changed in here. We are looking at this critical line in the sand around this 51. We'll keep our eyes peeled. There is an opportunity maybe to stick our toe in the water and get short. This still feels like a short. This pattern here, it's a series of bear flags. And this here is the much larger bear flag, and that would indicate a move way down, going down to the 45, 44. This would be the halfway move from here to here, and then you take that move and measure it straight down, and it gives you a much lower price if this is to break down. And this is a pretty strong line in the sand, so we'll keep our eyes peeled. Maybe we get into an inverse ETF. We put in some tight stop somewhere up in this area here above the 50-day and above these previous highs, and we'll see. But not sure if we're going to do that yet. We'll see how the market unfolds. It's still kind of grinding its way up, and it's not crystal clear on the pattern. It is stuck in a range. If we look at this range, we're stuck in this range right here. This is a pretty big range where there's a lot of volume trading through here. It's pretty messy, and we'll see how things unfold. But it does have a negative bias to me at this point still, and I think it could at least come back down to test this 51, 52 area. Last but not least, take a look at the US dollar index. More or less, it's had a pretty good flush down in price. We have had a little, you could argue here, a little five-wave pattern of 1, 2, 3, 4, 5. We are down into long-term support zone right through this area here, where more or less the market had a nice three-wave correction and ABC correction before starting to rally higher. So it is settling down into the upper end of this support zone. It's at the 5-day moving average right now. Maybe things chop around and it sells off, carves out a bottom here. But overall, I think we're going to start to see the dollar have some type of bounce back up in price, and that could put a little bit of pressure on gold as well. I mean, a lot of the currency issue with Brexit, I think a lot of money piled into the dollar, obviously because it's coming out of the dollar now and going into other currencies, and we're seeing the same with gold. Gold's been moving down, and money's coming out of gold and going back into some homeland currencies for different countries. So we'll see how things unfold. If the dollar does start to bounce, that could potentially put a little extra pressure on the precious metals sector. Anyways, that's it for today, and I'll talk to you in a little bit. Bye-bye.